Hello and welcome to the 11th edition of Africa Forward Together. Thank you for joining us for a very different version of this annual event, as we usually have the pleasure of welcoming you here in beautiful Mauritius. But we intend for this year's webinar format to remain as instructive and insightful as ever for you. This year, AFT will comprise 4 webinars over 2 weeks, all tackling directly or indirectly the theme Building Resilience Together. Resilience here denoting the capacity to recover quickly from difficulties and the quality of toughness, which is such an appropriate word for 2020. Indeed, to say that 2020 has required resilience from all of us would be an understatement. Banks and financial institutions in our AFT community have not been spared from the impact of the economic crisis resulting from the COVID-19 pandemic. On the contrary, in addition to tackling the impact on our business performances, we have acted as an essential pivot for maintaining economic stability in our respective markets. What a responsibility to put on our shoulders. Furthermore, we are also looking to the future as African bankers with some uncertainty and apprehension, because African banking will most likely be shifting permanently to a new normal. A new normal where consumers behave differently, and also where new entrants will be leveraging technology to compete with us. Let there be no doubt, we will need to develop more resilience over the coming months and years. So the questions that must be going through the minds of all our AFT community is, where do we go to from here? And also, is there some lessons learned or some pointers or some ideas or solutions that we can gather from within our own AFT community? Well, I believe that we can. And in fact, the objective of today is to share some lessons learned, some thoughts, some observations and insights for your benefit, but also for your feedback, as you will be able to interact with us through the GoToWebinar platform by submitting questions or comments. I'm pleased to introduce today a lineup of speakers from a recent disruptor to the African banking scene, Orange Bank Africa. They will join us a little bit later, and we will be joined in fact by none other than Mr. Jean-Louis Menann-Kouame, CEO of Orange Bank Africa, who will present alongside Mr. Patrick Roussel, his Executive Vice President for the Mobile Financial Services Division, on how they set up a bank in the middle of a global pandemic, and also how they intend for technology to be the cornerstone of their ambitions in Africa. They will join us a little bit later, but first, I'm very pleased to introduce 3 speakers from MCB who will share a few insights and observations on how MCB is riding out the current challenges, where their focus has been lately, and where will MCB look to for future growth and resilience. They are Pierre Guy Noël, the CEO of MCB Group, and Alain Law Min and Raoul Gufflet, CEO and Deputy CEO respectively of MCB Limited, the main banking subsidiary of the group headquartered in Mauritius. So our first speaker, Pierre Guy Noël, will share with us his thoughts on key challenges faced so far this year and some lessons learned. Thank you for joining us, Pierre Guy, and over to you.
Thank you, Erwin. Ladies and gentlemen, on behalf of MCB Group, it's my great pleasure to welcome you to this new event of Africa Forward Together. Unfortunately, as Erwin was just saying, we haven't managed to get you down to Mauritius, but we've managed, through the organization of 4 webinars that will be held over the next 2 weeks, to make sure that the community of African banks was able to share views together. This new format should in fact allow more participants, and I'm sure that it will prove useful for sharing experiences and learning from what the others have experienced during this tremendous year we've seen so far. Indeed, 2020 has been quite a year, and that's probably, I would say, the understatement of the year. Every single one of us, to varying degrees, has had both his personal and professional life affected by the pandemic of COVID-19, which has spread all over the world and reached all the shores of every place and every corner in the world. In Mauritius, we experienced the first positive case of COVID in March 2020. And just as was the case anywhere else, it started spreading rapidly throughout the island. The authorities, however, were very quick to react, and shortly they closed our frontiers in order to keep the virus away from us. And a few days after having locked the frontiers, they decided to go into a full lockdown of the local economy. Those were quite drastic measures that took most of the population by surprise, and in fact caused a lot of disruption to businesses in general. At MCB Group, being part of the banking industry and being considered as an essential service, we were awarded 500 work permits to be able to maintain banking services to the public. This has got to be seen in relation to the some 3,000 people we currently employ in Mauritius. Thanks to our contingency plan, which we had tried and tested and designed beforehand, we managed to keep certain key branches open in strategic areas, which guaranteed sanitary security to both staff and customers, and introduce split teams and split sites for certain key functions of a bank, while moving the vast majority of our employees to a work-from-home mode. During the first few days of this lockdown, as you can imagine, our core crisis management team was busy readjusting the various hiccups that we were getting, some of them actually coming from our regulator, who kept asking us to open more branches or to close more branches. But after a couple of weeks of fine-tuning, we finally managed, once we had stabilized our operations, to run the bank with just 250 people on site. As at today, we're still operating part of our operations in split teams, which take turn to come to the bank, and we have around 40% of our employees who work from home on a daily basis. The fact that we offered internet and mobile banking services to our customers was in fact a considerable advantage. And it will come as no surprise to you, but since then the registrations for those services have surged. We've also seen new habits from customers, some of them favoring the use of tap-and-go cards whenever they went shopping, and traders, thankfully, discovering the merits of e-commerce and of home delivery. The lockdown of almost 3 months we went to was quite efficient in curbing the virus. In fact, ever since April of 2020, we haven't had a single case of local contamination through the virus. The only cases we've had so far have been in relation to travelers to Mauritius, and most of them have been detected while the travelers were still in quarantine and therefore were quite easily controlled. But obviously, controlling the virus has had a tremendous cost to our economy. The latest economic figures published by Statistics Mauritius talk, in fact, of a contraction of 32.9% of GDP during the second quarter of this year, which corresponds more or less to the period during which we were under lockdown. And we've seen a surge in unemployment, which went just past 10% in May of this year. Throughout this period of lockdown, government has implemented various wage assistance schemes to enable companies that were not receiving any revenue because of lockdown to keep paying their employees and to maintain them on the employment. And they have also paid people working in the informal sector of the economy, discovering at the same time that this sector, which everybody thought had about 100,000 people, did in fact comprise of much more people than that. Everybody was in fact in the informal sector and was queuing to get grants from government. They also introduced schemes to incite banks to offer moratorium to individuals and enterprises and to incite us to lend with government guarantees for working capital requirements. Following the resumption post-lockdown, some companies obviously were very quick to bounce back, and this is particularly the case for those companies that are geared towards the local economy. Others, like manufacturing or traders, have been suffering from supply chain problems and have had to face the increased cost of transport, but are getting back quickly to normal. Construction has been quick to bounce back and will benefit from the very heavy program government is planning over the next years in terms of investment budget that has been provided for in the local budget this year. The only thing where we think we'll get a few delays going forward is in terms of foreign direct investment, which is directly correlated to the construction industry in the sense that a lot of that investment is in fact in relation to persons buying property in Mauritius. With problems of traveling and with the airline industry, this will definitely get delayed, but I mean the projects are up and going and will be finished and will, I'm sure, restart again once traveling is back. The one sector which is being heavily impacted is obviously tourism. We have only just this week reopened our frontiers, and this has meant that the country has been starved of foreign currency for the past 6 months. When you know that last year tourism contributed in excess of $1.5 billion to the local economy, you can imagine the impact this has been having on our economy. Furthermore, certain constraints in relation to quarantine, which is required. We have a mandatory 14-day quarantine required for everybody traveling to Mauritius, and we are still waiting to see what will be the regular flight schedule going forward. We only have, I think, at the moment, 4 or 5 flights a week scheduled. And when we look at the experience of the countries where we operate and which have opened to tourism of late, I'm talking here of the Seychelles and of the Maldives, tourism has been very slow to pick up because, obviously, of the fact that there is a lot of uncertainty on traveling. So tourism as a direct contributor to our GDP accounts for about 8%, but when you take into consideration the various sectors that are working closely with tourism, such as transport, tour operators and suppliers of various kind, we in fact estimate that in excess of 20% of GDP in Mauritius is directly linked to GDP, to tourism. So what we are seeing now is the fact that it will obviously take more time for certain sectors to recover from where we are today. And all the initial hopes of quick recoveries from tourism, I think, are now gone, and most people are now talking of tourism probably not getting back to where it used to be before at least probably the end of next year, knowing that it will take time to build up. So obviously, these enterprises will need to get some sort of support in order to be able to ride this storm. Government has recognized that in its last budget and has come up with specific measures to assist companies and help them recover from the crisis. In respect of small and medium enterprises, they've come up with a number of schemes through the Development Bank of Mauritius or through the state investment corporations, which will help those companies build up again their production capacity. But for larger companies, such as companies operating with the tourism sector, and here we're talking probably of companies with a turnover in excess of 100 million rupees, the government has set up under the aegis of the Bank of Mauritius a special purpose vehicle called Mauritius Investment Corporation, the purpose of which will be to invest in quasi-equity in those enterprises to give them the necessary oxygen to enable them to see the crisis through. In this very difficult context, we have just published our full year results, being, unlike most of you, we have a June year end, so we've just published our full year results last week. Given the context, we've had, I would say, a very good performance, with profits being down only 16% compared to where they were last year. In fact, we had started the year very well. We were more than 20% ahead of what we had achieved for the first 6 months of operations, but then COVID caught up with us. We obviously had a drop in revenue in relation to fees and commission essentially linked to the tourism sector, things like card fees and like profit on exchange. But the single biggest contributor to our drop of profit is in the level of provisioning we had to put through by way of expected credit losses for future losses in the economy. We have companies which are still not operating, and we have taken the prudent view that we needed to provide for those. Provisioning this year increased more than threefold, getting to almost 5 billion, which meant that our profits dropped from 9 billion last year to just short of 8 billion this year. I think in the current context, that's quite a performance. What is now more and more evident is that this crisis is not over yet. In fact, there seems to be a resurgence of the virus in a number of countries, particularly in Europe. This will no doubt maintain pressure on margins and will also mean that the longer the crisis lasts, the more pressure we will have on our expected future credit losses. In the present context, we feel that caution is warranted. We will, as we've been doing ever since we've got back to some sort of normality after the lockdown, stay very close to our customers to better understand their requirements and to see how they are evolving. And we believe that having comfortable liquidity and capital buffers, just as what we have at the moment, cannot be considered as a luxury in the present context. This is probably why the central banks across the world have been requesting banks to refrain from paying dividends to their shareholders this year. It's worth noting here that throughout the 182 years of existence of MCB, we have regularly paid dividends twice a year, except for 11 occasions until this year. The last of those occasions occurred in 1908. So that gives you some sort of idea of how important and how deep this crisis is for our local economy, and I think it's the same for most of the countries where we operate. Having said that, at MCB, we remain resolutely turned towards the future, and we will keep building the blocks through improvements to our processes, to our systems, and to our people, so as to be able to take full advantage of a rebound once this COVID thing is behind us, hoping it will come soon. Thank you.
Thank you very much, Pierre, for your comments. If any of you, our audience, have any insights or comments on Pierre Guy's observations, please do not hesitate to submit them through the GoToWebinar platform. Next up is Alain Law Min, the CEO of MCB Limited, so the bank based in Mauritius, who will share with us his main preoccupations so far in 2020, how they compare to last year, and whether he managed to get some sleep at all this year. Over to you, Alain.
Thank you, Vin. Thank you, Pierre Guy. From Pierre Guy's summary, it's amazing how there's been so much happening over the past 6 months. It's incredible. And I hope the next 6 months are going to be much less eventful than it has been for the past 6 months.
Keep dreaming.
AFT, as you know, is all about sharing and learning from each other. And 2020 has been extremely rich in terms of experiences and in terms of challenges. So I'll spend some time to just share with you what we've confronted and how we can obviously learn from those experiences. Last year during AFT, I had a quick summary of the 3 main challenges that was top of my mind, and probably that kept me awake at night. These were cybercrime, fraud and regulation, future and evolution of work, including working from home, and technology-driven change, which included a shift in power to the consumer. The future has caught up rapidly and much earlier than what we had anticipated on all these fronts, and even beyond that. So I would like to spend the next part of my presentation talking about those 3 areas and how they've evolved during the crisis. If I may just... So the first challenge on cybersecurity, fraud and regulation. I would say that fraud and cybersecurity have been very prevalent, but there has been, obviously with technology, but at the same time, it has been somewhat business as usual. But what I've perceived as being a big improvement from previous years has been how we've interacted with the regulator and public authorities. It's amazing how, during a crisis, how everyone can get together and look towards how we can resolve problems a lot more efficiently. It's the relationship of the regulator with the regulators has suddenly changed to being close collaborators. And Pierre Guy did mention about some of the issues we faced, but at the end of the day, I think we managed to find solution to all these areas where we were confronted with. Just quickly, where we had common interests, obviously, during that crisis period, and the key areas on which we had to confront and we had to deal with was how best we're going to serve our customers whilst having to maintain essential services. How do we provide support to customers to keep businesses running during lockdown? And how do we ensure that the banking systems remain resilient? And eventually, which is a priority for us, how do we ensure the health and safety of our staff and customers? This required a change in the mode of communication with our regulator. And from what traditionally had been paper-based communication, we've seen an evolution towards email and even WhatsApp messages between regulator and the bank. And we created a WhatsApp group with even the governor and his 2 deputy governors during that time, which is still sometimes used at this very moment. Why did we have to create that mode of communication? I think you all understand that during the crisis, the key element was how can we react quickly, how can we take decision quickly, and how can we implement the measures that have been identified by the central bank for the benefit of the customers and the economy. So the stakes were high, but we managed to, thanks to regular feedback with the authorities and I would say the rapidity of their decision taking. In fact, in some instances, decisions which normally would have taken days or even months were taken within the hour, and that helped us tremendously to ensure that we were able to support our customers and the economy. So going forward, we hope that this collaboration and partnership will continue to improve, because that partnership will improve the resilience of banks and help to support customers and the economy, which is continuing, I must say, right at this moment. We are interacting with central bank on discussing the future of banking, and I believe there has been a change in the way we interact, and for the better, and I believe that this will help us going forward in terms of dealing with the crisis which Pierre Guy has mentioned, which is still very much with us until our frontiers start to reopen and tourism picks up again. The next challenge has been on future of work, which has arrived much earlier than we had anticipated. In fact, we were already discussing about how we could make more flexible our working arrangement with working from home as one of the key pillars. But we didn't anticipate that we would have had to implement such system, working from home, as Pierre Guy described, within very, very short period of time. In fact, we dropped from 3,000 to 250 employees within a week, which meant that we had to very much rely on technology and also on our proper organization to be able to achieve that. On top of that, this has required also flexible working locations, and people had to work in separate locations just to prevent the propagation of the virus, and with more flexible working hours. What this has enabled us to learn from, and we continue to learn from that experience of work from home is that, first of all, work from home can be an enabler for increased efficiency. In fact, we've seen that some of the functions actually achieve more than 25 to 35% increased productivity during the work from home. But it is not universal across the bank. And in some areas, obviously, we saw that there was, in fact, a decrease in productivity by working from home, especially in support, in some support functions, and even in some back office functions. Secondly, I think full-time working from home is not sustainable in the long term. Human contact, teamwork is, for me, essential to be able to promote values and culture and to promote synergies among our team. So the challenge remains is how do we integrate work from home within our flexible working arrangements, and how we can ensure that such arrangement is beneficial for the bank in terms of improved productivity, for our employees in terms of a better work-life balance, and also for the whole of our organization in terms of more agility and adaptability, which will be more aligned with the expectations of the millennials, which was in fact the main challenge which we identified last year, is how the millennials were viewing the future of work and the new work environment. So the third challenge has been the accelerated adoption of new technology. During the crisis, we were very surprised about the rapid adoption of digital channels and also digital payments. In fact, people were quite scared to handle cash, which is a good thing because eventually cash was seen to be potentially propagating the virus. And suddenly people started to use extensively our digital channels and payments, which put us all under quite a number of challenges in terms of how we could need to adapt our existing end-to-end processes to be able to meet customers and business needs. For example, we had to develop an application which was an adaptation of our online credit to be able to apply for moratorium online. We had to set up jointly with our partners e-commerce platform which enable our SMEs, to be able to offer their products to their customers online and with deliveries, and at the same time accelerating digital payments for payment online and also for payment at the merchants. So this was indeed the right opportunity, which in some ways forced us to deploy our capabilities which we had developed in the digital factory, to be more agile and to be able to deliver within very short period of time while testing and on a regular basis and improving on a regular basis. We will cover quite extensively technology, digital transformation, either next to webinars and even in the discussion for the meeting of minds. And I would encourage you to log in to be able to learn more about the solutions and the insights which we share further with you on technology. So the next step, the next part of my presentation would be to show you the results of the survey which we had conducted last year just before AFT 2019, and also recently, just before this webinar, on what were the main challenges our FT community were facing in their different countries, in their different jurisdictions in 2020. As you can see on the screen, cybersecurity risk and related expertise has remained the top priority, which is quite logical in terms of the increased use of technology, with the fact that many countries where you operate have also locked down. What I find quite interesting is that item number 2, which is expertise in IT and digital transformation, and number 4, change management in anticipation of future trends, and number 5, technology expertise in leadership team. They are all technology related and technology challenges, and how we're going to move banking with now the new environment and the new way of doing business. So 4 out of the 5 are technology related. The third one is on item 3, which is on the cost of regulatory compliance, which I guess is very much on the mind of everyone in terms of regulation in a very difficult climate. And obviously cost is an issue for many banks, including ours, in terms of with a reduction of revenue, how we can manage better our costs. In addition to those top 5, we have also seen new challenges added to the list, which is again not very surprising. Liquidity risk and capital adequacy are very much on the agenda. Future of work, which I've talked to you about. De-risking, which is also related from our perspective to the challenges we're facing with our EU listing, EU blacklisting. And I think this is going to become tougher and tougher in terms of regulation, in terms of correspondent banks or some of our correspondent banks trying to ask more questions or even de-risking in certain areas. And the final item is on managing profitability. Obviously, is a major challenge in the days where we know that profitability will be impacted. We know that it won't be so soon that we'll be back to 100% of our economy. So the impact on revenue is going to be, at least for the next couple of years, very much on the agenda, and cost management and impairment obviously will have to be looked into very closely. So this wraps up my section. We've had the opportunity to share with you some of the very high-level insights, and we look forward to discussing more of those challenges in webinar 4. I think it's Thursday next week, where we will in fact deal with a number of those challenges going forward, and how banks are going to have to adjust in this new normal. Thank you very much.
Thank you, Alain, for your insights. And as usual, we look forward to your feedback and comments through the platform, which you can submit. Our final speaker from MCB today, before we welcome Orange Bank Africa, is Raoul Gufflet, Deputy CEO of MCB Limited, who will share some of his convictions and some suggestions as to how MCB and the wider AFT community can thrive going forward. In other words, where do we go from here? Thank you, Raoul.
Thank you very much, Erwin. Always difficult to talk after Pierre Guy and Alain. And thank you very much, Alain, for those very pertinent insights. Allow me to look at it from a slightly different angle. I've chosen this slide from fragility to resilience just to express the view that with the COVID-19 pandemic, we have been thrown into a very hostile world, one that has really tested our adaptability and probably made us more fragile than ever before. I am, however, an optimistic, and I've always believed that human beings will endlessly try to transcend this fragility by looking for purpose, for meaning in everything they do, in their personal lives or in their professional lives. To overcome such a vulnerability, the precariousness in which we've been living during the confinement and the lockdown in each and every jurisdictions where we're all coming from, human being always tried to assert himself and transform this fragility into strength. And this is where the resilience comes. If you look at philosophy, resilience is the art of unlocking and blocking the dead ends where everybody is. And it's about, as Pierre Guy and Alain mentioned, it's about bouncing back. And this is also true for the exercise of thought itself. What is a thought if it's not a bouncing thought? And this is resilience, because suddenly, and you can see that from the slide with the tree, by the force of a word, a thought, everybody knows how to bounce back, how to adapt itself. Alain spoke about the AFT community preoccupation, and these are obviously, because of COVID-19, all legitimate. I'm taking the last ones about rising costs, reduced margins, impairment losses, which Pierre Guy mentioned and which have seriously impacted a very good trend over the financial year 2020 that the bank has been followed, and the group who was actually aiming at. Liquidity risk, which have been of concern for all of the banks that are attending AFT this year, and I'm sure that you've been talking to your regulator as often as Pierre, Alain and I have been with our regulator about liquidity issues. De-risking of correspondent banking relationship, essentially because most international banks have been looking at the African continent with a little bit of caution, probably even more in Mauritius with the blacklisting of our country. And all of these will impact the African bank's return on equity and will pose a lot of questions on how, going forward, can we manage risk and capital when it's not our regulator who actually is doing it, well, not just about dividends, but also maintaining strength for the industry. How can we best manage the cost, streamline our own resources? How can we adapt to the shifts in consumer behavior, especially with regards to accelerated digital adoption? And I'm pretty much convinced that it's our ability to prepare for those risks and uncertainties that will shape our resilience, our collective resilience. And this can be achieved through essentially three main factors. Innovation, of course. Alain mentioned that in a lot of details. And what you will see is that most of the companies who were unprepared at the onset of COVID-19 pandemic, they really paid the price of their short digital capabilities. Those who adapted, on the contrary, who developed agility, proactive client service, they have and they will rebound. I cannot recall how many clients have called us to talk about how well this Juice platform that we've developed has been helping them to transact during the confinement. How well this move towards contactless payments, towards helping our clients to use digital platforms, have been really helping make their life easy during this period of extreme fragility. Second one, collaboration and partnership. Again, here, there were so many lessons learned, so many solutions they developed during lockdown. It is amazing how MCB has been able to transform through the collaboration of its staff and transform itself even faster than what most strategic companies have been able to do. We've been able to actually do credit outside, working from home, when we have been told that this would be impossible, that we could not access the core banking system without really being connected to the internal system. And we've been able to do that. Alain mentioned about WhatsApp, the collaboration. I mean, how many of you haven't had a WhatsApp group to make sure that you can be delivered food to your places? But the best example that I would like to invite you to look at is the one that our group subsidiary, MCB Consulting Services, as a strategic partner of Temenos, recently implemented with a cloud-native solution remotely for Orange Bank Africa. And I'm sure that Jean-Louis Menann-Kouame, the CEO of Orange Bank Africa, will share his experience with you. The third one is probably a bit more emotional, a bit closer to my heart. It is how to build resilience together through sustainability. What threatens us in our society is, to me, an era of widespread neglect. It's the dissolution of our social bond. It's the fact that our citizens, wherever they are now less and less able to commune on anything, and they're more and more reduced to cultivating their own private sphere. And I think this is where sustainability brings about purpose. For ourselves, but for the community also as a whole. Every company you will be looking at, they now care. But why do they care? They care because the constituents they care about also do care. Whether they are customers, investors, employees, regulators. So let me now try and be unequivocal. In the sustainability revolution, there will be no company who will be left unchanged. And those that act the quickest will be those that will end up leading. I recently wrote an article that my sustainability team sent to me, which actually dictates that sustainability is the next digital. And this has spoken to ourselves for the past 3 years. At MCB Group, and this was led by Pierre Guy, our Success Beyond Numbers initiative has helped us, is still helping us, strengthen trust with our stakeholders, contribute to stabilize our market, now, during the lockdown, and certainly post the crisis. We've decided to fight a few battles. We cannot fight as many battles as we want, but we believe that the battles on fostering local and sustainable economy, on climate change, on fighting inequalities, on promoting the cultural heritage, in investing in health and well-being of our communities, will resonate deeply, not only with our staff, not only with our clients, but also with the challenges that are posed by the COVID-19 pandemic. And here I'm thinking about essentially 4 main areas that I've highlighted on this slide. The first one, obviously, is green sustainable finance. It is a common thought now that there is no bank who cannot include sustainable finance on its agenda, whether it is through strategic decision not to finance some of the high carbon economies, or clearly to take sustainable action themselves. But the one that would probably speak to you the most, African banks being part of AFT this year, is the African Continental Free Trade Agreement. I think this represents enormous opportunities that are linked to the infrastructure gap that exists in Africa. Here I'm thinking about the energy, the road development, rail transportation, water infrastructure, all those gaps on the continent that hinder its economic development, the quality of life of its people, the growth of the businesses of your clients. Then comes support to local economy. In a very, very dysfunctional world that we are living in, where multinationals have been suffering, it is clear that the Local is Beautiful initiative we launched 2 years ago should resonate to each of every one of you in your respective communities. We can talk about it, we can explain to you how is it that we've managed to create awareness of the whole population, the whole ecosystem, to promote small and medium enterprises and to make sure that they become the vectors of growth in Mauritius, in our region, and why not in your own communities. Digital savviness, I mean, we talked about it, Alain has explained it to you. It is clear today that anyone, any company who is not digitally ready will miss the train of digital payments, will miss the train of the new world we will be living in. And last but not least, and we've been living it vividly, the impact of climate change and climate change mitigation strategies. The Wakashio that has landed on our shores is certainly not a consequence of climate change, but the oil spill that have really spoiled our own ecosystem will have an impact on our ecosystem, and will have to force us to actually look at new strategies as far as how do we treat the world we live in. So sustainability, I'm personally convinced, will allow us to live together. Together and not against each other. Together and not next to each other. Together with each other. And it's only, if there's a message that I would like to pass you, it's only through the convergence of interest, therefore through solidarity, that we will build collective resilience. It is by creating and strengthening the connections in our communities, in our workforce, that our industry, that we bankers, will create a safety net for the people who often fall between the systemic cracks. All those efforts, they've been taken on a new urgency, because those cracks, they've widened because of the pandemic, because of the climate crisis, because of the economic instability that we are all facing everywhere we live. Yet, these are very, very big challenges, growing challenges. But this actually means that there is much more work that needs to be done, more than ever, for us to ensure that all the people have an opportunity to contribute to our communities and lead healthy lives. Through all the policies that advance, that establish justice, equality, diversity, inclusion, African banks, and we are an African bank, will demonstrate how doing good for all the people is good for business and is good for a better future. I personally, and we all three, look forward to hearing from you and continue our engagement going forward. And despite this Africa Forward to Together seminar being virtual, we strongly believe that our community is not. Our community is real. Have a great Africa Forward. Have it together. Thank you.
Thank you very much, Raoul, for this uplifting message. And here's to collective resilience. Thank you also to Pierre Guy and Alain for your insights. And we will now move on to our final and keynote address today, which will be from Orange Bank Africa. So 12 years after the launch of the Orange Money Transfer and Payment Service, Orange Bank Africa launched earlier this year on a completely mobile-based medium. We were talking about disruption. Well, here it is today. Here to share the incredible story of how they launched during the pandemic is none other than the CEO himself, Mr. Jean-Louis Menann-Kouame, and he will be accompanied in this address by Mr. Patrick Roussel, who is the Executive Vice President of the Mobile Financial Services Division of Orange Money and Orange Bank Africa. Both speakers will talk about the experience of launching the bank, the ambitions they have for Africa, and where they seek to make a difference. As Raoul mentioned as well, they will also talk us through the successful launch of their cloud technology solutions that they did with Temenos and MCB Consulting Services, who was an implementation partner for this project. Of note, part of the implementation was done actually remotely through the COVID-19 pandemic. Thank you, gentlemen, for gracing us with your presence. I now invite you over to begin your presentation.
Okay, thank you. I am Patrick Roussel, so I will start the introduction before speaking about Orange Bank Africa. I'm currently heading mobile financial services for Africa and Middle East, and maybe I will try to come back a little bit on the reason why a telco group like Orange went into the field of financial services through the mobile. I would say that the story has started 12 years ago, as mentioned, in Africa, because there was a huge penetration of mobile services, while there was a lack of penetration of banking services for the mass market. And by connecting the technology in between the two, wallet within the mobile and the digital relationship through the telco activity, Orange was able to set up Orange Money Services, which has now reached more than 55 million customers across our 15 countries, where we are currently operating both telco services and mobile financial services. So this is really financial inclusion by reducing circulation of cash and helping population in paying and transferring money instantly or in an instant manner using the digital service facility that has been put in place. So the question is why a telco went into mobile financial services. So the answer is very simple. In most of our geographies, including France and Spain, Orange is a leading telco player facing huge competition in terms of network infrastructure and retail prices. So when you are a leader, you have no choice but enriching your customer proposition with value-added services so as to increase the stickiness onto your network instead of keeping your customer by lowering your access price. So this is why one of our first new service was launched with financial services in Africa, but also in Europe with French market and Spanish market, so as to better encourage our customer loyalty and capitalizing on our shops and our digital relationship that we were having through the telco business. But by doing so, it appeared that mobile financial services has become a real, tangible, fast-growing business with its own rules, especially regulatory rules and corresponding potentials. And mobile money in Africa is also a very competitive market because you have both all other telco players that went into the mobile money services on one hand, but also on the other hand, you have the banks, traditional retail banking players that are going into the mobile financial services through their own app, capitalizing on the 3G and 4G network deployment of the telco by providing OTT app to their customers. So we decided to enrich our customer proposition, our mobile money customer proposition, with banking services so as to propose a key differentiation to our customers compared to the competition. Because when you lose your mobile money customers, you may also lose your telco access customers. So you are losing on both sides. So this is the reason why we are currently developing in all of our geographies the provision of banking services with very short-term loan and savings facilities. So there are two means of doing so. Number one is to do it by our own, and this is the story of Orange Bank Africa on which Jean-Louis will come back, but also through partnership, like it has been done in Kenya, for instance, by M-Pesa and Safaricom Group. And we are also deploying current PICO loan and saving facilities in some other geographies through such kind of partnership. And the results are very encouraging because this mass market, not being seen as potential customers by banks, is starving after such kind of facilities. Even so, they are not traditional banking customers because simply they are belonging to the more informal sector. But Jean-Louis will come back on that. The mobile money as well as the telco business are very rich in terms of data, and data is key also for doing such kind of mobile banking industry and setting up in West Africa, we hope so, the first mobile banking for the mass market in the next coming years. So I will leave the floor to Jean-Louis, who will explain what is the story, what is the strategic reason of setting up our own loan and saving factory, and how it is now being operated. So Jean-Louis, it's your turn.
Thank you, Patrick. Thank you very much. First of all, I would like to thank MCB for this invitation in order to share information about what I can tell an amazing project on the launch of Orange Bank Africa in a dynamic area, the West Africa region, which is characterized by a low banking rate penetration and a very, very high mobile rate penetration. Obviously, and you talk about this point, in a COVID pandemic context, it appears that our cashless model is very relevant for our targets and beyond for all the population. So I hope that the organization can show you my free slides. Can you confirm that you can see the slide 2? Because I don't have it in my screen. Can you confirm, please,
yes.
that you have?
Yes.
Okay.
Yes.
Thank you. So in the slide, I just want to share you what is our ambition. Patrick just talked about this. We wanted to contribute in a concrete way to economic democratization and financial inclusion. The financial inclusion, you know, guys, there's a lot of chatter about this important topic in our countries, and Orange Bank wanted to develop a concrete action in this financial, in the notion of financial inclusion. So we want to facilitate access to financial services for the most fragile social strata and or those living in geographically remote areas. This is a mainly informal population, low-income population, rural population, and we wanted to address this point. How do we implement our model? By a multi-channel digital bank with a simple value proposition at the launch, a current account, savings account, loan. So a simple value proposition by 4 distribution channels, the USSD and the application of Orange Money. The second channel is our own mobile app, our own Orange Bank Africa mobile app, our website, and a branch. We have one branch, one physical branch in our business model demanded by the central bank. Geographical extension for the bank is planned for 2021. So we launched the activities in July 2020. And next year, we aim at launch in Senegal, Mali, and Burkina Faso, where Orange as MNO and Orange Money as a mobile money provider as very well established. The second point I just wanted to highlight is that our TikTok, which is the naming of our Pico credit offer. So we are in the slide 3. So the TikTok offer gives Orange Money customers access to an instant credit and savings over in just a few clicks. We have a promise, 3 points to highlight: accessibility, instantaneity, and attractiveness. What do we mean by accessibility? Orange Bank Africa offers me a mobile offer accessible to everyone, regardless of the place, thanks to our mobile network operator, Orange Côte d'Ivoire, we get a very good telco infrastructure. So we have an accessibility for everyone, everywhere. We have a promise of instantaneity. That means that you can apply for a loan, you can save money in just a few clicks, and Orange Bank respond instantly. So we hope that in 3, 5, or maximum 10 seconds, we will be able to respond to a saving loan as for our clients. And attractiveness means that we have attractive borrowing and saving conditions for our clients. Let me tell you that the main point here about instantaneity means that the performance of our core banking system is the key issue, one of the key issues of our business model success. And I will talk about this point in the minutes to come. Our value proposal, let me tell you that even if we target individual and micro entrepreneur in informal area, our personal loan began from 5,000 to 100,000 CFA. That means $10 to $200 that you have to reimburse in a month. But we will move slowly in the months to come to $100, and we will maybe reach a limit of $1,000, and we will move to a limit of $2,000, especially for micro entrepreneur. So in the month and the quarters to come, we will move to this amount. And the savings, we have a 3.5% interest rate that we serve to our clients, and they really appreciate that. The last slide is about the successful implementation delivered in the launch of Orange Bank Africa thanks to the collaboration between our partners. Let me tell you that you can see in the left that at the beginning we have the Temenos core banking system T24, and around this core banking system we had to implement requirements about the central bank. We have in the West African region a banking accounting plan, so we had to implement this recommendation, these requirements. We had to implement our own specific requirements as Orange Bank Africa, and the local customizations to have a final project. And this is where MCBCS, your company, was a key player in the building of our bank. A key player, and I would like to thank Jean-Michel Félix and all his team who deliver a high level, an amazing job to reach our goal, which was to open a bank only 9 months after the IT kickoff. Temenos is a core provider in charge of environment setup, hosting, and run activities, but MCBCS is the Temenos 24 customization and integration actors to Orange components. That means that they integrate all the specification such as Orange Money application, our scoring tool, the central bank interfaces, the compliance tools, and so on and so forth. And this is because MCBC has done a great job to make these interfaces and this integration that today we are in the running activity, and things are going quite well. I want to finish by some key success factors. First of all, we had a clear objectives, which was to launch a digital bank in July 2020, and we achieved this point. we had a minimum valuable product, MVP mindset, to stay focused. Let me tell you that in my side, I wanted, as new CEO, I wanted to implement new things, etc. And we said, no, we have a goal. We must be focused on our MVP. And after the launch, we'll see how we can enrich our offer. So this was a key success factor. The third point is that we developed a constant collaboration despite the sanitary crisis. Temenos from France, MCBCS from Mauritius or South Africa, Orange Bank Africa from Abidjan. All the teams were in a great collaboration despite the sanitary crisis, and this is an amazing example of how we can achieve a great goal even if we are in a sanitary crisis such as COVID-19. To make sure constraints are well handled, we were aligned, or we pay attention about the central bank requirements. Our central bank in the WAMU region, the West Africa region, is not simple. So we have to pay attention about the all requirements. We had to pay attention about the security and the data protection standards, and we work hard on this topic. And the last point is that we had to work in order to have a high performance level to be sustained to meet real-time expectation and support high-speed customer. We want to reach 10 million customers in 4 years in 4 countries, Côte d'Ivoire, Senegal, Mali, and Burkina. So to reach 10 million clients, we have to be sure that we have a strong CBS with high performance to support the high-speed customer we want to enroll, and of course a smooth onboarding of new countries in 2021, as I told you. So this is the main points we wanted to share with you. We are still working in order to fine-tune some items related to the core banking system, relating to the performance, relating to the high-speed customer that we want to enroll. 2.5 months after the launch, we are comfortable about the fact that our model is relevant, but we have to continue to work with Temenos and with MCBCS in order to strengthen our core banking system and strengthen our business model. Thank you for your attention.
Thank you. Many thanks to you, Jean-Louis and Patrick, for your insights, and congratulations on the launch of Orange Bank Africa, and also welcome to the Africa Forward Together community. Thank you also to our audience for your patience and participation. We are almost at the end of the webinar, but we have received a couple of questions from you for both MCB and Orange, and I'd like to take a very short few minutes to put them to the panel. So for MCB, we have a question regarding the work from home. So with regards to working from home, how do we, MCB, ensure data security and confidentiality? Maybe this is a question for Alain, which he can address.
I must say, first of all, I'm not a technical person, but this is a subject which has been very much on the agenda in our risk and security discussions. And first of all, on confidentiality, I think everyone is aware that when your laptop or your PC is on at home, I mean, anyone can, if there are people around you, they can get access to that information, as basic as that. So things like that, we're looking into how we can have shut screens quicker than in the workplace. In terms of data security, it's the same security that has been replicated. Whatever we've got working from the offices, it's the same security that has been installed around the PC, around the laptops of everyone working from home. So I would think that today, apart from the physical information which is available on screen outside the place of work, everything else is ring-fenced in the same manner as it was ring-fenced in the workplace, at work, on site. So I don't know if that answers your question, but it gets quite technical, and if you need more information, we can send you some more information by mail.
If you allow me, Alain, I think just to add to what Alain has said, there's one thing that we should recognize and we should pay tribute. This is to the whole operations team and IT team, because it's all about planification and anticipation. And from the moment that we heard that there may be a universal lockdown, we had the whole of our IT people making sure that all of the PCs that would be taken home be hardened, that all the connectivity would actually be looked at, strengthened, so that the first objective was to create all the conditions for confidentiality and access to the system remotely be done in the best possible security conditions that we have internally within the organization. And I think it's just about anticipation and investment, because we also managed to find a lot of PCs that we've distributed to the key persons that we would believe would need to be actively participating into the collective effort of working from home. And there's been a lot of planning from our crisis management team to actually identify those people who would essentially need to be the ones to be connected from the first day of lockdown.
Thank you, Raoul, and thank you, Alain. On this point of security, I think on Thursday, the webinar, which will focus on the monster that is digital transformation, will also touch upon this very subject of security. So I do encourage you to sign up for it if you haven't done so already. So for the second question, which is addressed to Orange, as a mobile-only bank, how do you manage liquidity risk? I believe this is a question for Jean-Louis.
Yeah, thank you. Liquidity risk is a very important topic as a bank. And first of all, as we develop the saving accounts, we make efforts to collect saving from our clients. And let me tell you that for the beginning of our activities, we have a good response, good feedback from the market regarding the ability of people, the ability of clients to save the money. So this is one of the first point. The second point, a very important point, is that as we are in a group, we have the mobile money issuers in Côte d'Ivoire, but also in the free over countries. We will launch our activities next year. So these mobile money issuers used to collect a lot of money, and they have to put it in the banking account in our competitors' bank, such as Société Générale, and so on and so forth. So we develop the possibility to keep one of or a part of this amount in order to have the liquidity, the treasury to support our credit, our loan activity. So we manage this this important topic of liquidity in this two area for the saving that we collect and the money that the mobile money issuers of Orange Group located in Côte d'Ivoire and the 3 other countries of West Africa.
Thank you very much. Do we have time for one last question before we end this webinar? I believe we do have a comment addressed to Alain. So the comment is, Mauritius is very different to most continental countries in Africa. So aging population, high banking inclusion rates. So during the lockdown, we noted that there were long queues at the branches. The level of digital literacy is not necessarily very high. Does the bank have a strategy to improve the adoption of digital channels amongst the population, notably maybe through for older generations? This is the question.
Thank you, Erwin. I think the key word is literacy, is financial literacy. And it cuts across age. What we've seen during the lockdown has been a lot of queues, not necessarily old people. They were, Pierre Guy talked initially about number of people who had their accounts credited because they were self-employed and they didn't have their regular revenues and they were credited on their accounts. And to our great surprise, most of them had accounts, but they didn't have the capabilities to go to ATM. They didn't. They had the cards, but they didn't want to go to the ATM to withdraw their cash. So I believe it's yes, it is an issue. It is an issue about literacy. It is an issue about how we can, over time, make our facilities more known to not only the older generation but all across, and I think it's definitely on the agenda of the banking association in which I'm the chairperson, that we should continue to promote banking services, online banking services, so that people can avoid having to queue in front of branches like we've seen recently.
Thank you, Alain, for this insight. Wonderful. We have now reached the end of our webinar, and I'd like to thank you for your attention. We did take a little bit over the time allocated, but I trust that the insights will have been useful for all of you. So thank you to all of our speakers today from MCB, and especially to our keynote speakers, Mr. Jean-Louis Menann-Kouame, the CEO of Orange Bank Africa, and Mr. Patrick Roussel, who is the Executive Vice President of the Mobile Financial Services Division. I'll see you on Thursday for the second webinar, and have a good afternoon. Goodbye.